Welcome to the 30-Day Mobile Home Park Podcast. In my decade and climbing in this business, I have seen many people completely change their lives within as little as 30 days. It took me over a year to buy my first mobile home park. But through my help, I've seen plenty of people cut that time frame dramatically. I've even helped people flip a dead-end trajectory into a fruitful mobile home park portfolio. So what do Michael and I hope to achieve with this podcast? We want to improve the reputation of mobile home parks nationally by way of upgrading the quality of landlords out there. The solution? We help good would-be entrepreneurs get off the sidelines and into the game. And at the same time, we also want to help current landlords up their game as well. In either case, we feel we can achieve this by equipping good people with the right tools. So where do we start? For all the folks who turned it around in 30 days, more exist that took way longer. Worse, plenty of people that I have met personally over the years who should have become mobile home park owners sadly didn't. Logically, Michael and I feel we should begin this podcast by making sure you, the listener, don't suffer that same fate. In these first few episodes, we are going to dive into our top 3 reasons why people who should have bought mobile home parks failed.
Mobile home parks need good would-be entrepreneurs to get off the sidelines and into the game. My name is Ryan Neris. I started with nothing. No money, no network, and no experience. Over my first decade in the business, I've acquired over 80 mobile home parks spanning 4,500 lots and counting. No matter what level you're at, I can help you get started, scale, and get your business to the next level.
I'm Mike Panzolini. In my 10 years working in private equity, I've managed over 250 mobile home parks. I've spent my entire career in real estate, both personally and professionally, building complex systems and processes and leveraging data and technology to create automations in both acquisitions and operations. I can teach you the methods that the big shops use to professionalize your business.
Together, we will equip you with all the tools, wisdom, and skills that I needed to create and scale a larger business from humble beginnings.
And I'll give you that big private equity shop edge to push your business to the next level, bringing institutional tools to the individual investor. We are the 30-Day Mobile Home Park. In this episode, we're laying the groundwork for the season ahead. Think of this as an outline, a preview of the key topics and themes that we'll be diving deeper into in future episodes. Each point we touch on today will be explored in much greater detail as we move forward, giving you a comprehensive understanding by the end of the season. So if during this podcast you find yourself feeling enlightened, but also brimming with more questions, that's okay. We promise to answer all of those additional questions in due time. So with that, Ryan, let's kick it off.
Reason number 1 of our top 3 reasons as to why good people fail to get started in the mobile home park asset class is quite directly an ineffective strategy. Let's break this down because there is multiple subcategories within the ineffective strategy prohibiting someone from getting started in the game. Look, there are too many similar strategies. There's way too much copy paste in the mobile home park arena, even to this day, a decade later after I got started. If you are new tuning in, does it sound good To have something that's 100 lots or more, all tenant-owned home, direct build utilities, well located in a bigger city, of course. And it turns out about everybody and their mother is looking for exactly this. And their idea for operating is really not any different than the next person. So what this creates is a situation where everybody is looking for the same thing and nobody is differentiated.
Yeah, and I think, Ryan, this strategy works for the bigger institutional players now that the word is out about mobile home parks, and it has been out for quite some time, right? So first of all, these bigger guys, these private equity shops with massively deep pockets and billions in investor capital, they need to deploy this capital. And just to give you some insight into how a fund operates and works, when we're raising a new fund, we have a fundraising period that lasts about 6 months to a year. And during this period, we go out, we search for investors, and we get their commitments. They don't pay us right away. There's actually directly following that investment commitment period is our investing period, which is where we take on that investor capital and we deploy it in a period of usually about 1 to 2 years. For a lot of people, 1 to 2 years sounds like a lot of time. It is in the mind of an individual investor for sure, but in the minds of billions of dollars in capital private equity shops, they have a very limited amount of time to deploy a lot of investor capital. And what that means practically is that we might overpay for a deal if it hits the return thresholds that we typically set out for, so long as that means we can invest that money within that 1 to 2 year investment period. So yeah, if your strategy is all TOH, larger communities, only city water and sewer, there are a lot of bigger fish out there that are going to gobble up those deals. So I would differentiate your strategy in order to avoid having to compete with those players.
This should surprise no one, but when you have a plethora of individuals and groups going after the same target with the same strategy, this results in bidding wars. And these bidding wars are ubiquitous. Small towns, medium towns, big towns, doesn't matter. Quite simply, there are too many high bidders. So Michael just briefly caught you up to speed about how private equity shops chase after the unicorn and can bid out the unicorn and just absolutely crush you. But it's not just PE shops. Bigger syndicators, medium-sized to regional players can also outbid you. And by the way, not only on the unicorns, there are plenty of really, really nice properties that are sub 100 units that get bid into oblivion. Or they're over 100 units, but they're not necessarily in the greatest location. Doesn't matter. When you have a handful of unicorns and then you start having less boxes to check on other really good properties that don't necessarily check all the boxes, that trickle down happens. And it's just right to create a situation where you have limited supply, a very narrow focus by a lot of people that just creates tons of bidding wars.
Yeah, and outside of just the deeper pockets we talked about, Brian, it's not just the PE shops, these larger syndicators, people who have been in the business for a long time. They just have cheaper financing options because they have expanded access to the capital markets and a stellar reputation with lenders. Most of these people who have been in the business for a while, they have those relationships. They are calling the same banks that are on speed dial again and again. And because they've done so many deals with these guys and they've worked long hours to secure those favorable financing rates, they're going to beat you out on a rate standpoint as well. And what that means practically is if they're lowering their financing rates, that translates to the fact that they can increase their bid and reach the same returns as you. And on top of that, we'll dive into this a lot more in future episodes, but these guys have economies of scale, meaning they definitely have other parks in the area, and they're going to leverage the employees, the contractors, the vendors from these other parks and use them in the park they're bidding on. So that translates again to a tighter expense ratio and ultimately the fact that they can bid a higher price in order to secure that park. So these are just two additional reasons why these bigger fish are increasing their bidding and pricing out some of these newer investors.
if you think of this like a David versus Goliath type situation with the PE shops and the bigger syndicators being the Goliaths, and most of you listeners being the small time person, you're just not going to compete conventionally. It's not going to happen. You're going to lose. I'm going to lose. Michael and I are going to lose in our respective businesses. It's just not going to happen. So the natural temptation that I've seen over and over and over again is when confronted with this, the logical next thing to do is just go, well, if it's a good deal, I'll look at it. This, by the way, is one of my biggest pet peeves. It's been around always, and not just in mobile home parks, about any asset class. When someone is new and coming to the space, it's just a temptation. Oh, if it's a good deal in Arizona, I'll look at it. If it's a good deal in Maine, I'll look at it. If it's a good deal in Alaska, Florida, Texas, Tennessee. How does that make any sense? How are you going to win in an unconventional way? How are you going to be David with your one skill set that you can dominate at, your slingshot, if you're taking a more Goliath approach to it? I'll look anywhere will strip you of the creative ways that you can win. People who understand a market or a handful of markets will find inefficiencies within those markets that bigger players and people with too wide of a focus are just never going to see, because they're never going to have the time to take those deep dives into those markets. And what that allows you to do is that allows you to find those inefficiencies and then get creative to find your way into those deals. So in other words, you have to become David. But the thing about David is David doesn't have a wide focus. David has one skill set that he absolutely masters. Then all of a sudden you can take on the Goliath. Unfortunately, though, most people starting out don't know this. So I feel like if I really want to get this thing going, I need to cast a wider net. But then when you do that, the quality of information that you have suffers.
Yeah, Ryan, it's so funny hearing you say, I'll look at any good deal. I think when I initially met you and I was leaving private equity to start my own entrepreneurial journey, I think I said those exact words. And the reason being is because I was still in that large operator private equity mindset where, hey, whatever, we tackle whatever we can find. And so as I entered that entrepreneurial investment phase of my journey, this was a massive issue for me in figuring out what my slingshot was. And it's really why we spend time in our course teaching people how to hone in on their strategy and give them tools that will help them narrow this focus. In private equity, you don't really have to do that, right? These big private equity shops usually don't have to contend with this because they actually thrive on more deal flow. They can look at everything. They just have a plethora of associates that they can lean on to work harder and longer. And if, God forbid, those guys run out of juice, they'll just hire more people to fill in that additional deal flow. So they can really afford to chase everything because they have unlimited resources to do so. But you, as an entrepreneur, you cannot. So you will burn out very quickly if you don't find your slingshot. You'll get discouraged. You'll end up chasing your tail. This is why I think it's super important to hone in on your strategy and have a very clear direction as to what types of parks, what market you're going to choose, and then you're going to run at that goal full force.
Michael, you get a pass because of where you came from. So, look, most people end up saying this. I believe I probably too at one point said something like that. It's part of the trap of being new. Speaking of which, the next subcategory is too little specialization. In this theme of David and his slingshot, if you don't have your slingshot, if you're trying to be too many things at once, you're trying to be an archer or a cavalry, you never really truly get good at one thing, meaning you're going to struggle to develop those skills. I'm going to say something tough right now, ladies and gentlemen. Newbies do not have skills. Struggling is to be expected. When I started out, I'll remind you, I had no money, no network, and no experience. I come from a martial arts background. Guess what? I started out as a white belt, just like every fellow black belt started out a white belt. It's okay. It's okay to admit you are new and you're a white belt and you're just getting started. Because step one is you have to know that there's going to be unknown unknowns. And through the unconscious incompetence phase, where you're not good and you don't know that you're not good, you have to have that humility and honesty within yourself that you have a lot of blind spots. And that will allow you to get to the next stage, which is conscious incompetence, where you start to realize what you don't know and what skills you lack. From there, you can start getting into conscious competence, where you start getting really good at it and you start knowing you're good at it. But true mastery comes from unconscious competence. You just know stuff and you can just do stuff. Now, what does all that include? Well, first and foremost, a network. I don't care who you are. If you're in the real estate space, you need a network. Period. Full stop. You need to be able to call banks, contractors, investors, fellow property owners, mentors, the works. You can start building that out and cultivating and maintaining that network today, regardless if you wind up in the mobile home park space or not. And you're never really done. You have to always be building and growing and maintaining your network. Michael alluded to this earlier. Private equity shops will beat you because they have better debt than the normies have access to, as well as cheaper cost of capital. If you've never raised money anymore and you're coming into this space, it's going to be a struggle out of the gate, and that's okay. A lot of you are coming to this asset class from another asset class, and you have people who know and trust you already, which gives you a competitive advantage, which is fantastic. But in either case, you're going to need to build a reputation, and you're going to need to find cheaper and better areas of cost of capital for you to be able to compete. Speaking of networking, I want to highlight specifically brokers. When I got started 10 years ago, it was a novelty when someone called you up to try to buy your mobile home park. 10 years ago in 2015, when I got my start, most people, when you called them, they'd be like, "You want to buy my mobile home? What?" And magically, you could have a conversation. They would answer your calls. Nowadays, I personally get multiple calls a day from unknown numbers and even some numbers I do recognize. Mobile home park brokers have called everybody in the entire country. If they can find you, they are calling you. And it doesn't matter if you have 6 lots or 600 lots. Doesn't matter if you're in downtown of a massive city or in the absolute middle of nowhere. There are more broker shops today than I believe have ever before existed. And they are better at cold calling than you are. And they will probably always be better than you at cold calling. That does not mean you shouldn't cold call. That just means the number one person or people or category of people you need in your network are brokers. Yes, investors are incredibly important for cost of capital reasons, but guess what? You can find someone that will help you with your deficiency around raising capital if that's your area of struggle. You need to be in touch with brokers. That is a necessity in today's world and likely will never go back. And then the last point that I really, really want to highlight here around skills and networks that you have to build is you have to build an intimate knowledge of these markets. If you are going to be David and compete with a Goliath, and even if you're not going to compete with a Goliath, the people who consistently do really, really well in real estate, they know more than the market. It's really that easy. if you know, and I've made an entire episode about this on Mobile Home Parks in Real Life, my former podcast, but the episode was literally called Legal Insider Trading because it is completely illegal to have market knowledge asymmetry and then exploit that to your advantage. If you know where a market is going and how it ebbs and flows, you are going to be better positioned to be more creative and do some really cool things versus someone who is taking way too wide of a focus. And then the last point I really, really want to hammer on, to summarize about everything Michael and I have laid out here in reason number one of our top 3 reasons, ineffective strategies. The punchline, folks, is similar gets you ignored. You're going to hear Michael and I say this over and over and over again. Similar gets you ignored. If you are doing what everybody else is doing, how are you better than the rest? So you have to be smarter than that and better than that and best your own psychology to not fall victim to just thinking you're better because you're you. You have to go out and be better, and you have to go out and be different, because if you're similar, I'm sorry, but it will be a race to the top and someone will outbid you and you will lose. Michael, we're optimists. Let's talk some solutions. So you have a similar strategy to everyone else. The obvious answer is develop a unique and effective strategy, right? Duh. But what does that look like? Like I had Max Baker on my podcast, Mobile Home Parks in Real Life, we talked about why buying rural can actually be a really good thing. Believe it or not, I own a property in the absolute middle of nowhere. Michael, as of this recording, has a property under contract that isn't exactly close to anything. Ladies and gentlemen, you can buy stuff in the middle of nowhere and do incredibly well. Michael and I are actually going to take a deep dive on this at one point in time and explain how and why. But for right now, for all intents and purposes, you have an ineffective strategy. One thing you can do is, well, try not to be in the downtown of a huge city. PE shops are going to look at big cities as less risky, and they're going to want to be there. They're not really going to look in the middle of nowhere. And there are people that live in the middle of nowhere and will continue to live in the middle of nowhere, and that's all they know, and that's what they love. And there's no reason why you can't go in there and do very well. Private utilities. So here's a stickler. Does it freak you out hearing about well systems going kaputs or septic systems failing or wastewater treatment plants? I own tons of that stuff, and I've got to tell you, there are pros and cons to everything, including private utilities. Some of my best properties, by the way, are on complete private utilities. There are a lot of really strong reasons why you ought to consider exactly that, or at least not immediately discount something if it's well or septic or wastewater. And then, Mike, I want to get your opinion on this, but sub 50 units. Turns out you don't need to buy 100 lot plus property to get in the game. I own several 6 lot mobile home parks, truth be told. So you don't actually need massive to get started. In fact, how I got my come up in this space was I averaged about 40 lots per mobile home park, but I hyper focused on a handful of markets. And if your average lot size is 40, all you need are 3 mobile home parks to have that magical third digit in your count. And it turns out, as long as you can get the job done, it doesn't really matter if all 120 are right there in one parcel or if they're spread across 3 different properties. Mike, what have you seen over the years?
Yeah, right. I think we'll dive in future episodes as to why more pads is better. But overall, just looking at this from an overarching standpoint, what did we just talk about? We talked about how private equity shops look for those economies of scale opportunities. And what you're doing here by buying these sub 50 units, if you're doing that multiple times in the same market, is you're creating that economies of scale that is driving down that expense ratio. And that's going to effectively give you the same strategy as a PE shop on a smaller scale, of course, but you're going to do what the big guys are doing. So this is a great way to build a portfolio of smaller parks that equates to the same number of pads that a big PE shop or syndicator would buy in one fell swoop. So think about that. It's a great way to work your way up to a private equity strategy or a big shop strategy. Do exactly what Ryan did when he was starting out. Just look for those smaller, undervalued parks that big guys don't necessarily even notice. And then at the end of the day, you might have a portfolio that the big shops kind of look twice at. Now they're coming to you to maybe buy that portfolio. This is an absolutely fantastic strategy. I think most people, if they are having trouble getting into the space because they're looking at those larger parks, look at the smaller ones. You're going to get a lot further, especially with those small time mom and pop owners who have these smaller parks. They're going to want to hear from you versus the big Goliaths of the world. They want to see their parks going into the hands of a good-hearted investor versus a big P shop, which they view as potentially having no soul. So, this is a great way to get into the space. And I just wanted to drive that point home.
Another thing that Ian and I did early on is we realized everybody wants all tenant-owned homes. It's part of the appeal, or at least pitch, about why you should get into mobile home parks, which is, are you tired of fixing toilets and roofs? Well, guess what? They own it. Turns out it's not that simple, and mobile home parks, even when all tenant-owned homes, will be a lot of work and a lot of difficult work. However, for the purposes of what we're discussing today, what is a different, more unique strategy? Buy park-owned homes. Look, whether you buy an all tenant-owned home community or all park-owned home community or a mix and match, you are going to be in the mobile home business. I mean, the mobile home business. People move. I went and did a data crunch recently, and I found that between 10 and 15% annually of my stabilized, mostly, if not all tenant-owned home communities turn over. That means 1 or 2 people out of 10 sell their home and move away. Now, sometimes that goes according to plan, where they will find a buyer. That buyer will come to you. They will apply. They will get approved. You don't have drug and crime and background checks that break your computer. There are tons of good people who will do things the right way. But there's also people who will sneak sale, because if someone shows up and hands someone $10,000 in cash and all you got to do is hand them over the title and move, unfortunately, there's a ton of folks who will just do that and not even let you know and go ahead and evict me. So you're going to face that. Call it plus or minus 10% of the time, even with an all tenant-owned home community. So if you're going to be in that situation anyways, albeit on a much smaller scale, why not buy something with some park-owned homes? What's wrong with maintaining some rental homes for a little while? I run a hybrid portfolio where I have some park-owned homes and some tenant-owned homes. I let the market tell me what it wants. If it's more of a renter's market, I'll hold park-owned homes for longer. If not, I'll sell them off. But at the end of the day, as long as you have your proper dealer's licenses and pay the taxes and follow all local, state, and federal laws, what's stopping you from buying a community with park-owned homes and selling them off? Because again, you're probably going to be doing this at some point. It happens relatively frequently, call it once a week across my entire portfolio, where we will get a phone call that says, I need to move. Sometimes it will even say, I need to move quickly. And guess what? We can pay a fair price for that mobile home, and then we can sell it and maybe make a little profit, or even not make a profit at all, and just make sure we hand select the correct next person to go in there to maintain a good property. Your property is only as good as the people you put in it. So if you're going to have that anyways, why not consider buying a community that's got some park-owned homes on the front end?
Yeah, and this is massive in differentiating yourself. My company strategy was to not look at anything with more than 20% POH ratio. That means that no more than 20% of the homes could be rentals. So that eliminates pretty much, 80% of the parks out there. And the reason for this was that we, as a private equity shop who are very low risk, viewed these parks as having an unseasoned tenant base. And there's good reason for that. When you look at the numbers, the difference in turnover was 2.5%, which means every 40 years, a tenant would turn over in a tenant-owned home versus 25% for park-owned homes. So that's a massive difference, right? And if you look at multifamily, there's a 50% turnover ratio for multifamily tenants. So POH is still half of that, much better. However, to 25 versus 2.5 is still a massive difference. So when we looked at those parks, we said, well, we want those seasoned tenants who aren't going to turn over because we don't like that risk. And by the way, most banks, most buyers only capitalize the lot rent, so they won't give you credit for that additional home rent. And this is why, you're probably going to differentiate yourself massively just by looking at parks with park-owned homes versus only focusing on those coveted tenant-owned homes. What you can do in this case is convert all of those park-owned homes to tenant-owned homes over time. Now, all of a sudden, the big P shops have their eye on that park, and you might be able to flip that park much more easily to a P shop in the long term.
Now, I break this down in great detail on my podcast, Mobile Home Parks in Real Life, all the pros, cons, pitfalls of taking a conversion strategy. It's a lot of work, not going to sugarcoat it. If this is your first hoorah, you're going to make mistakes. It's going to happen. However, you really ought to consider it. Speaking of other difficult things to do that will differentiate you, infilling mobile homes. So it turns out bringing a home to a empty lot is a huge to-do. I mentioned earlier, dealer's licenses, you're oftentimes limited by the state in terms of the number of homes you can buy and sell within a fiscal year without a license. You need to make sure you're following the law and you're fully licensed. That takes time. Of the however many licenses I have now, multiple licenses in multiple states, none of them have been easy. Some of them take over a year. True story. Some of them can take as little as 90 days, but not without a lot of your effort. So it's not exactly quick. It's very necessary to do. I've seen people get a lot of trouble. Specifically, South Carolina, you can wind up in jail. True story. Make sure you're doing it the right way. So first and foremost, before you even look to buy a home and bring it to your mobile home park, you need to make sure you're not going to wind up in jail if you are not properly licensed. Now, that's a little bit of a scare tactic to throw out there. South Carolina law isn't going to throw you in jail tomorrow. You really got to do a lot of bad stuff to get to that level. However, that's a serious consideration that you need to have. You need to not brush this off and ignore it. So before you even start looking for homes to buy, to bring in, you need to make sure you're following the law. But let's say you hurdle that, no problem. Why are those lots there? Well, they may be there and empty because they were never fully developed, so they're zoned but not developed, or maybe they were developed and there's an issue with them. The infrastructure's fallen to pieces, or there's just not a market demand for it. Look, back in the day, 80s, even into the 90s, people would show up to your mobile home park. There was financing for these that were a lot more easily obtainable for individuals to buy a mobile home. The cost to move in a mobile home was lower. And if you talk to any vet in this asset class who was around in the 80s and 90s, they'll tell you they would have a wait list of people who are looking to move their mobile home into the mobile home park. They didn't have vacant lots. And what happened is those folks who stuck around, they ended up getting punched in the face by rising costs and inflation. And as homes started to leave their communities, when they had their lot rents artificially low, 50% or less of what the market actually was, they just stopped having the cash flow to justify buying a home, bringing it in, having all those licenses, getting all those permits, waiting X number of months to get everything set up and have your, in some cases, certificate of occupancy, and on and on and on. Decking, skirting, electrical, plumbing, light rehabs, marketing, and on and on and on, assuming all the infrastructure works. It is a lot of work. It is a lot of risk, and it is a lot of capital, because it's very, very hard to find, not impossible, but very hard to find financing on infilling. However, it can be done, and it is upside, and a lot of people get scared away by it. Mike, you've done some infilling.
Yeah, I've done some infilling in my day, and I will say that I didn't have to do it personally because I had the backing of billions of dollars of capital. So I think that's an important point here, is that it is capital intensive. You need to have that capital set aside to be bringing in homes, and you need to be willing to kind of sit on that home until it moves, right? This is kind of comes down to market research. You need to see what that demand is before you take on an infill project. And this is something we did religiously at the private equity shop I worked at. We would underwrite rigorously for the demand for homes. And so I think as an individual investor, because of the high price of CapEx related to site prep and setup right now, it might behoove you to either be a contractor, and if you're not a contractor, potentially to partner with a contractor. I have a good friend who's a contractor and bought a mobile home park. He was able to infill 5 homes all through sweat equity, right? He did it at cost because he was doing the work, and maybe he had a couple of guys he was paying that are on his team. So it can be incredibly beneficial to have someone with this skill set on your team as a partner potentially too, right? So if you're going to take on an infill project, either one, just be willing to deploy capital at massive amounts. You will get paid back for it, likely in the long run, but it's an IRR play. It's not necessarily a cash flow play. And then if you don't necessarily have all that capital, consider partnering with a contractor, utilize those skills to kind of put sweat equity into your deals.
I want to hit a couple more things before we jump to the next solution. Lean operations. So if you've listened to mobile home parks in real life before, you can probably guess what I'm going to say right now. I got started with no money by paying myself. What does that mean? I did my own accounting, I did my own property management, and on and on and on. I found ways to pay myself for fixed costs that were in the pro formas anyways. And as a result, I was able to run properties and my property management company on a very, very lean basis. So lean operations, being very good at operating, will get your expense ratios down and allow you to compete where others are a little bit more bloated.
Yeah, and let's talk about building skills real quick. Ryan, how many people can say that they know how to do their own accounting? You probably didn't until you worked as your own accountant on your own parks. There's so many ways to build skills now online. You don't need to go get a college degree. You can pay $90 online for a Skillshare course that'll teach you how to do property level accounting. You can go on YouTube and just take on as much information as you possibly can about how to do certain things that are back office activities that can save you a lot of money instead of hiring those out. And, you know, we'll say it again and again, you have to build skills when you're an entrepreneur, but especially when you're starting out, decreasing your expenses by doing things yourself through sweat equity is going to be one of the best ways to multiply your capital. So lean operations is a great way to kind of lean into this entrepreneurial space and really differentiate yourself.
Be a Section 8 specialist. So I personally am not a fan of Section 8. Folks like Heather Blankenship, friend of mine, wonderful human being, great operator. She loves it. My accounting professor, true story, has Section 8, loves it. It turns out Section 8 behaves differently in different places, and some places I've To be fair, there are a few places where I still have Section 8 to this day, and I'm proud that I do. It is a real solution to a real problem that the government can actually help solve when done right. You can go and take on something that has a really negative stigma and do really, really well. Let me give you another, for example. Blue states versus red states. I am sure you have heard that blue states are easier to conduct business in because of not so tough legislation relative to red states. Guess what? There are plenty of people who do very well in blue states. Just because there are tougher rules and laws and regulations and hoops you got to jump through doesn't mean you can't make money. It just means it's harder. And where things get difficult and take more time, there are less people trying to compete with you. The spirit of what Michael and I are trying to ram home right here is that if you have an ineffective strategy, which if you are brand new to this space and you don't have a mobile home park yet, you probably have an ineffective strategy. But not just that. There are plenty of folks that I know who have plenty of mobile home parks who haven't bought in a long, long time, or at least not bought new ones enthusiastically despite having that desire. It's not just newbies who can be affected by ineffective strategies. It can also be folks who are plateauing. So whether it's Section 8 or pursuing states that have more difficult legislation, you can adopt that and try to make it happen. And this all comes down to something that deserves an entire episode in and of itself, which is becoming a market expert. We're going to do a podcast episode on taking deep dives in markets. If you take a deep dive in a market, you go an inch wide and a mile deep, and you fundamentally understand how that market works, where it's at today, where it's going tomorrow, all the key players, you build a network in that market, all of a sudden, you can have insight as to whether or not the legislation is really that tough. Or if it's tough, but there's workarounds. Or maybe Section 8 in that area is actually awesome and they'll work with you and it's a win-win for everybody involved. Or maybe it's easier to infill there because of X, Y, or Z reason. Look, you're not going to know those things if you're just going to look at any good deal. If you can pick a handful of places, magically, you are going to start to find some effective strategies.
I love what you said about doing things that other people perceive as difficult. So if you're able to build a strategy around, let's say, blue states in particular, what can we say about blue states? They're on the coast. Usually they're near big cities. And what do big cities have? Higher rents and higher salaries. So a lot of the problems associated with blue states, like the regulatory environment that might cost more and legal costs, for instance, this could be mitigated by higher revenues. So yeah, you might be spending more time working through evictions or something like that, but you have much higher rents. So these are going to offset those regulatory costs to some degree. And if you're an expert in those local laws and you have a good lawyer and you're building a portfolio in those areas, you can start to achieve economies of scale in these blue states where other people were terrified, right? And maybe you overcome some of the obstacles and create a very effective portfolio in that area that cash flows well. I personally have a friend who operates in New York, right along the Hudson Valley, and he is incredibly bullish on this area because it has a train line directly to New York City. So imagine some of your mobile home park residents are commuting to Manhattan every day to go work in the big city, right? Like they're going to have higher salaries, they're going to have higher wages, and they're going to bring that money back up to your park in the Hudson Valley along that train line. So don't just take a look at a blue state and be like, oh, it's not worth the headache. There's some great strategies that you can employ in some of these more difficult to operate in markets.
So what about bidding wars and the seemingly ubiquitous overpriced deal? Michael and I are going to take a deep dive on overpriced deals in the future, but to briefly touch on it here, and I don't just mean the obvious, avoid non-competitive situations. avoid institutionally graded properties. I mean, develop a really strong off-market pipeline. Build that network. If you know all the city council people, you know all the vendors, contractors, code enforcement people, all the local connectors and players, you're going to eventually meet all the mobile home park owners in that market or those handful of markets that you really, really like and have conviction around. You are going to start seeing deals that don't hit the marketplace. Yes, brokers have stepped into a much larger role today than they did 10 years ago when I got started. However, that doesn't mean every single seller wants to go through a broker. It's true. There are plenty of people who are very averse to paying or letting someone else pay a broker. There are plenty of folks who they find that very distasteful and just won't transact that way. Those people are out there. They're not going to sell to you unless you know them and they know you, and you know that's an option. So develop that strong off-market pipeline. Avoid the same methods for sourcing deals that everybody does. Unfortunately, there are a lot of people who outsource cold calling to like the Philippines and virtual assistants all around the world. There's also people who have enough money to hire people who are here stateside to cold call on their behalf. It is very hard to outsource rapport building. It is very expensive to outsource rapport building. It is so much more valuable for you yourself to pick up the phone and build that friendship and build that trust on your own. You gotta find a way to do that. Now, let me say one more thing before we move on to the next point, which is if you are in a situation that is a bidding war and everything you see is a bidding war, this may feel obvious, but isn't. Just be the highest bidder. Like, really that easy. Just outbid everybody. If you know your market and you know your business plan and you have confidence, as long as you go do the math and you know where your upward bound is, the highest you'd ever pay for this property is, and you stay disciplined and you don't go over that, you may pay more for something than you want to. The best deals are often deals that make you feel a little uncomfortable as well as the opposing party feel a little bit uncomfortable. And that's okay. So yes, it is okay to be the highest bidder, and oftentimes that is the right answer. The next solution I alluded to earlier, and Michael and I are going to make an entire podcast episode about this. Select 1 to 5 markets. I'll look at anything that's a good deal. That's going to fail. I'm not going to beat that up. I'm just going to double down on going an inch wide and a mile deep for all the reasons I laid out earlier. When you meet city council members and zoning officials and code enforcement people and contractors and brokers and of course mobile home park owners, magic starts to happen. You start to see the information asymmetry when you become Mr. Random City or Mrs. Random County. You will find that you won't miss deals anymore. And I don't mean that you're going to buy every single mobile home park in this area. I mean, a mobile home park is probably not going to trade without you either knowing about it or at least having a chance to submit an offer. Information asymmetry is the way to win in real estate, regardless if you're Goliath or David or anywhere in between. When you have information because you are local and you have those contacts and you know how a market ebbs and flows, you're just going to beat someone who's behind a desk. You are. But I don't want to belabor this. We're going to get into so much more detail around selecting markets and how to take that deep dive on a future episode. Now, Michael, you and I really want to take a couple minutes to talk about this next solution, which is just develop skills that will set you apart. if you can offer the market, say one of the following: strong operations, low cost of capital, high volume capital raising, or you just become a deal magnet where you just find deals on market, off market, whatever, everywhere. All of a sudden you start bringing value to the table. And what I mean by value is you are doing something that most cannot, if even to the point where literally you are the only person who can pull this random specific situation off.
Yeah, and I think this falls under one of the three pillars you mentioned, Ryan, which would be acquisitions, operations, and capital, right? Under the acquisitions pillar, I say a potentially overlooked skill is creative deal structuring. So if you can find a deal and find a way to get it done where others have failed before, you're going to be in a much better position to close many more deals than your competition. So as an example, you see a deal that's been sitting on the market for 2 months, and for whatever reason, there's no buyer, it's not under contract, and there's no obvious explanation as to why. It looks like a good deal. You do an initial underwriting. Maybe you pull out your 5-minute deal evaluator and you say, well, according to the numbers, this shouldn't be on the market any longer. There's a potential reason for that, and it probably has a creative solution. So like an example of a creative solution or a creative deal structure would be an assumable loan. Maybe interest rates are currently too high. And so the price that the seller is asking in the current interest rate environment is reminiscent of a time when we were at 4% interest rates or 2% interest rates or whatever the case may have been. So no one wants to look at this deal any longer because the price is too high. But in looking at the deal more closely, you see that there's an assumable loan, and you can work with the seller and the lender in order to assume the loan at a lower interest rate. Well, this is a creative deal structure, and potentially you're going to get that deal done where others have failed before, right? So there's a potential for other options as well, like bridge loans if you can't get immediate financing because, say, there's a negative cap rate because you need to do a little bit of infill before you get to positive. Maybe you can't get that loan right away, but in the future you will be able to. Well, once you stabilize the property, now you can go get that bank financing or agency financing, and all of a sudden the deal becomes a good one. This is another creative deal structure that you could pursue. We could go on and on about this, but there's the obvious seller financing. That would be another example. And any of these could be your secret sauce to get a deal done that wouldn't have been done otherwise and to differentiate yourself from the pack. And I think that this is especially true of off-market deals. So maybe come up with some creative deal strategies and approach your seller with those when you're submitting your LOI so that they see you as potentially an expert and someone who can get the deal done. Now you're presenting yourself as almost a consultant to your seller versus just another buyer who might be taking advantage of him. Rather, the two of you are working together to form a creative solution that benefits both of you, gets the park off his hands and into your pocket.
So I'd like to end off our first episode by ramming home the point that ineffective strategies will kill your ability to get into this space and will also stunt your growth for those of you listening in who do have a portfolio and haven't been growing as enthusiastically as you would like to do. I also want to reiterate this. The reason why Michael and I are putting this podcast together is because between the two of us, we have seen plenty of people who should have become mobile home park owners fail to even get started. We want more good people in this space. We do. We need it desperately. We need more good landlords. And we believe the way you do that is you bring institutional level tools to the individual investors. Ladies and gentlemen, welcome. There is so much more to come. Michael, I'm excited.
I'm excited as well, Ryan. Let's get into this. Entrepreneurs make mistakes, but with the overwhelming amount of free information out there, you don't have to be doomed to make those same mistakes. You just have to find a consolidated version of the most important information. What if I told you that Ryan and I will gift you all of the due diligence mistakes that he and I have made over the years for free? What if I also told you that Ryan and I will hop on a 30-minute coaching call to walk through any questions you might have, give you advice, and even do a free live deal review to get you started on your first or next mobile home park acquisition. Just leave us a 5-star review, screenshot the review after it goes live, and click the link in the show notes to fill out the form and send it to us. Afterwards, join our Facebook group, Mobile Home Park Masterminds, where you'll find hundreds of other mobile home park owners sharing ideas, contractors, and deals. It's free to join, and we would absolutely love seeing you in there. Thanks for listening. Until next time, keep learning, keep growing, and we'll see you soon.